Hello guys, what is happening, and welcome to this video. So we have a lot of different things that we're going to be covering today. We're going to be covering how we're already in a recession. We just don't realize it yet. And we're going to look at ShadowStats, which proves this, that we would in fact be in a recession if GDP was measured properly, which it obviously isn't, like all these doctored government statistic. We've also going to be looking at rents. I'm going to basically show you some of the reasons why I came out with that video on rents. So that's going to be really good to go through. We're also going to be looking at some of the moves in the markets and what's happened with basically crypto. I mean, I'm not invested in crypto personally. And the thing is, some of these stable coins, quote unquote, have absolutely collapsed, but it's the damage that that's caused that is incredibly interesting. You know, a lot of people have got duped into this crypto world by marketing and stuff like that. And I do believe some things like Bitcoin, you know, in theory sound fantastic, but in practice are absolutely awful because of the involvement from Wall Street and the banking system. So we're going to go through that. We're also at the end going to go through two stories, one from the Globe and Mail that has been blasted around Twitter. Everybody was absolutely up in arms when this story came out from the Globe and Mail. And I the first thing I said to myself was, did anybody actually read it? So we're going to go through that. It just proves how people, I think, just hear what they want to hear, or they just read the headlines. They don't even read the stories anymore. And then we're also going to go through a story about this cryptocurrency thing. So Ken is in the house. No, you're not late. We just started here. USB in first is in the house. What's up? Trader 586 is in the house. Mr. Fool, it looks like he is gone, and Revert to Means is in the house right on time, Ken. Check out Revert to Means' channel. It's awesome. Oh, we got a super chat. Thank you so much, USB in first. You're always giving these super chats, man. Thank you so much. I appreciate the support. Sold the rest of my crypto last night, all in metals now. More downside to come, but then metals go to the moon after stocks crash, go to safety. Yeah, you know, the thing is, when I talk about the markets in a bit, I'm going to be touching on metals, and I believe it's just an incredible buying opportunity, especially for some of the junior mining stocks. Stocks have been absolutely obliterated. So there's incredible value, I believe, there. It's just market manipulation right now, but they aren't going to be able to keep it at bay forever. So we're definitely going to go through that. And yeah, I you know, it isn't financial advice. You got to do whatever you got to do, but I don't think that isn't smart by any stretch of the imagination. So thank you so much, USB in first, for that. So let's go into this rental situation first and why I came out with that video, because I believe this is incredibly important. And it's kind of funny, guys, because when we did that video the other night, that's not what I wanted. I wanted this tab. So when I came out with that video the other night, which was about how home prices can go down, and I was going, are those home prices adjusted for inflation? And then when I watched the video back, because I'm ultra critical of myself, no, I'm just kidding. We're all amateurs here. I just come on here because it's fun. I hope to give back to you guys, share my thoughts and everything that I'm thinking about. Hopefully teach some of the things that I've learned from people that are much smarter than myself. Anyway, that's my idea. And I absolutely love doing this, guys. Like this, I really enjoy it. I wouldn't come here if I didn't enjoy it. I don't come here to make money or anything like that. I come here because it's a good time hanging out on these live streams and I really enjoy it. So anyway, I want to show you this. It says right here, inflation adjusted prices. And I was going, is it inflation adjusted? Isn't it? Anyways, so what I want to show you on this chart, just real quick, is in 2005, prices started going down. Okay, so you had prices that started going down in 2005, 2007. Now I'm going to flip over to a rental chart so you can see what happened with rents during that time. So kind of ignore this on the right hand side because this is all more recent stuff. But we're looking back down here, and you can basically see that during 2006, rents took a substantial dive. And if we go back to the chart between 2006 and 2007, and then go to this chart, we can see that between 2006 and 2007, home prices were going down. And it was kind of the start of the collapse in real estate, the very start. So price anchoring was at play. So you had about a year before it set in to reality for a lot of people that, hey, we're not going to sell the home, so we need to do something else with it. We're going to rent it out. And that's exactly why, if we go back to this other chart, you can see right here that rents drop. Now, here's the interesting thing about this, and I don't know if this is adjusted for inflation. I'm going to assume it's not because most things aren't. But if you look at this, it basically flatlines. So you basically flatline for a long time. I mean, it's pretty much flat, the rent. So obviously there's a run up here and we can't see. I'm guessing it's going to be a run up from down here before. But rents do pull back, and then we stagnate literally until 2015 when prices take off again. And I think there was a liquidity event that happened. The oil prices collapsed in 2014, I believe. Anyway, so it's incredibly interesting to look at this because a lot of people would be thinking rent prices, they're going to go up because a lot of people who are homeowners or potential homeowners are going to be moving into rentals, or homeowners that are holding off buying, that they don't want to buy because of the current situation, are going to go into rentals. That's not really the case. And here's the thing, guys. If you're in a good financial position, then the thing is you will be in the best place to negotiate rents as well. So the thing is, this chart doesn't even show you like the fact that a lot of people in 2008, especially, and after this time, would have been able to negotiate a substantially less rent if they're in a stable financial situation, because landlords were struggling to find that in 2008. It was extremely difficult to find a good tenant after 2008. And that's why so many landlords ended up in foreclosure. I mean, it was a time when you really didn't want to own a rental property. So it's really interesting, I think, that rents stagnated for so long. You had this initial pullback, which is about 10%, and then it just literally went on. Unfortunately, this is in per square foot, which makes you had to do the calculations, but it's about a 10% pullback, and then it just kind of stagnates. And rents were really dipped down here, like 2008. There was a little bit of a spike, and then back down again for a prolonged period of time, like 2 years. So it's incredibly interesting. And I looked at a few different markets, Naples, Florida, Orlando, Miami, all like these big bubble markets that usually catch a bid during the bubble. Isn't it funny, guys, how it's the same places though? It's always the same places. These patterns repeat. And I'm sure people in Florida right now, people in California are saying, this time is going to be different. This time is going to be different. And it's not going to be any different. I was talking to Scott Walters earlier, and we were chatting about I was telling him about the market here and how buyers are just dropping out. All these homes are just coming back on the MLS like they'd already sold, and they're coming back on because the sales, the contracts are falling through. And he was saying it's a similar thing there, and there just isn't that many buyers. Like, buyers are starting to disappear, and it's just crickets. So it's really, really interesting to think about that and think about the implications of that on the market, because it means less liquidity in the market. I mean, an ideal market is not one where home prices are exploding. It's ones where home prices are very gradually rising and the turnover is quite quick, so that people can sell, people can buy, and then the market's in full swing. But if you have the things decoupling, like the buyers decoupling from the sellers, they're going onto the sidelines now, and now you've got a lot of sellers coming onto the market, and and there's just not that many buyers around. It's less liquid, and the fact is, guys, that when this sort of thing happens, you're then going to face the price anchoring, which we can go back and look at on this chart. There was a period of price anchoring that occurred before prices started collapsing. So prices really started collapsing from July, June 2007. So obviously it was a dead spring market. Tons of listings came on the market, as we can see from this chart here, which puts supply over the price. So supply is this orange line, and you can see it exploded to the upside, and it was around this 2007. So you had the supply just exploding after this massive deficit in supply, which you had down here, and everybody would have been saying, oh, it's never going to crash, the supply is so low. The same sort of things that we see today, we would have been seeing back then. So it's really interesting. These patterns just repeat, and it just boggles my mind, because I'm like, it's the same things. We just see the same things over and over again. Like the same things are happening in Portugal, Greece, Spain, Mexico, Costa Rica, Panama, like any places where these where the trickle down of the stimulus comes from people from the States, people from Canada, people from the UK, Germany, all these places that add massive stimulus programs. They flood into other markets, like they bleed into other markets. So all different markets get affected by it, and it's the same. It's the same as what happened in 2008. Now, interestingly enough, and we're going to save this for another live stream, is I was looking to try and find a country that didn't deficit spend during the pandemic that much, which was incredibly hard to find, believe me. And really, I came across two that stood out. One was Iceland and the other was Bulgaria. And I'm going to save this for another live stream because it warrants a whole video explaining that. But guess what? Real estate in Bulgaria, do you reckon it boomed? No deficit spending, no massive stimulus programs. Did it boom? No. Real estate didn't boom. Asset prices didn't boom. So it's you can really see how that stimulus injection went all into these asset prices, propping up these asset prices. And it doesn't last. Like, it doesn't last. Here we are, 2022. The time frames that these stimulus injections are taking to run out are getting shorter and shorter. I mean, imagine, guys, that they back down, they go into stimulus again, let's say, at the end of the year. Like, how long is that going to last? 6 months before they're jacking rates up again? Like, it's just not going to work. The economists are eventually going to have to put two and two together. And I assume they know this, because I think they have some degree of logic, but maybe they don't. Hilliard will probably disagree with me on that, because he knows they have no logic. And he's been to school and studied economics. He knows exactly what's taught there. And he said on the live stream the other day that they do not recognize bubbles. And it's something he writes about in his book. And it's incredibly important to understand how these so-called quote unquote experts are actually what they're learning when they go to school and learn economics. Because the thing is, guys, if you go and learn economics, get a degree in economics, it's very hard for you to then go away from that track. Like, that's your base level. And now you've got a broken understanding of economics as your base. And then it's very hard for those people to then change their views completely. That's why I'm so glad that I learned it this way round compared to going to school, getting an economics degree. And I'm not going to do that. Total waste of money, total waste of time, in my opinion, unless you're trying to get a job at a bank or the government, which I'm not. Those are the last places that you will see me. So a couple of things that I want to go through first before we get to everything that went on with Luna and Terra and everything that's been going on in the markets this week and those stories. I just want to show you this because I think this is incredibly important. So this is obviously the US, the great USA, but basically this shows the annual change in GDP, and you can see it using the BEA, and this is probably using the deflator of inflation, I'm guessing, of the normal CPIU, which it will be in the BEA, and then the SGS, the ShadowStats alternative BEA. You can see here that GDP has not come positive. Like, this literally shows that we're still in a recession in 2022. And the Fed is raising rates. Like, you can forget the government statistics as far as I'm concerned, because we all know how much we can trust the government, as we're going to see with this Globe and Mail article and, you know, all these other articles that come out are just a load of garbage. Like, these so-called experts, these so-called people who are working at places like the Bank of Canada, working at places like the Fed, they are clueless. They are just, and let's face it, guys, if they understood anything about economics, they'd be making money, trading their own accounts, or working for a bank, earning millions of dollars. And even the people that work at the banks, I mean, they are just so, because there's just, I mean, anyway, I'm not going to get into the quirks of the banking system and how broken that is, because that'll lead us down the garden path. But another thing I want to go to is unemployment, because this I found absolutely insane. And I got a shout out to George because he was the one who clocked me on to this. I didn't even know they had this section. We're normally staring at the inflation section of this. But this basically shows the unemployment rate in the US. And again, just like everything that the government does, guys, it's completely understated. The unemployment rate is just completely understated. And it's even more understated in places like Canada. If you look at the amount of people claiming unemployment, for example, in Alberta right now, it's at the same level it was at in 2008. Yet they're trying to say that unemployment has recovered, the recovery is here. Like, they're not fooling anybody with these phony statistics. And the way, like, we should really do a video on that as well, a live stream on unemployment, because, and how that's such a broken statistic. But anyways, look at this. This is absolutely insane. It's just going to blow your mind. So basically, you've got the official U3 unemployment rate, which severely understates it compared to the U6, which I'm guessing the U6, adjusted for SGI, young discurrent who were deemed. So 1990s. Okay, so they're using 1990s unemployment for this, if they measured it the same way as they did during the 1990s. So you can see that it's literally right now around, like, that's going to be around 7.5%, isn't it? So it's around 7.5% right now, yet they're saying it's under 5%. Like, that's a huge difference. That's a difference of about 30%. But it gets even more interesting when you go into the ShadowStats data, which I think is way more accurate. And you can see here that the unemployment rate is around 25%, which is probably about right. It's about true. And really, we're going to see that come out into 2022, during the end of 2022. It's all going to come out, because all the stimulus money that was injected is running out quicker than anything, and it's just not going to last. So I thought that was really, really interesting to just mention about that. But okay, so I wanted to go through next before we get onto these stories what happened with these cryptos, because it was absolute carnage in some of these cryptos. So let's start off with this Terra. So this Terra coin absolutely crashed. Like it was one of, I think it's like the 14th biggest cryptocurrency. And what you can see here is literally like a couple of weeks ago, it was trading around $82.59. And right now, like it is insane, guys. It is down to literally not even a penny, like not even a penny. And they tried to do something to save it there, but they just got up to like not even a penny again, half a penny just over. Like, this is just insanity. Like, and this has literally wiped people out, which we're just going to go through right now. And it is sad because a lot of people, like these companies, obviously they have big financial backing, some of them, and they are incredibly clever about how they market and who they target and how they target people. And you can't just say, oh, these people are all dumb, Luke, or anything like that. No, I don't agree with that at all. I think a lot of these people have just been misled completely down the garden path. And it is really sad, in my opinion, because most of these people who've lost their life savings are retail investors, as you're about to see with this story, which comes from the Business Standard. So I just highlighted like a little bit of this article, but Terra Luna cryptocurrency collapses 98%. Investors lose life savings. The dramatic crash of Terra Luna ranked among the top 10 most valuable cryptocurrencies has wreaked havoc in the lives of investors who are feared they will become homeless after the crypto mayhem. I would say some of the investors, it's not everyone, they've just picked two off Reddit. So these are two things that they got off Reddit here, which I'm going to read to you. And really, I'm reading these as just like a warning, I guess, if you're in any of these obscure random cryptocurrencies. And I really don't like, I'm not big on these cryptos. Like, I don't know lots. Well, I know enough about the cryptos, and obviously I know about Bitcoin. But all these other ones, like, I don't know that much about. But like, literally, this guy says off Reddit, I got greedy hoping to get more money so I can at least afford a down payment for a house for my family. I guess no house and savings then, the user posted. I mean, that is just absolutely insane. And, you know, I feel really bad for these people because they've just been like, it's really sad. You cannot not have a heart on all this. You can't say, oh, these people, you know, they're dumb. I just really don't believe that. I think a lot of them have just been victim of Ponzi schemes, and some of them are incredibly smart about the way they go about getting your money. Like they really are. And if it's too good to be true, it often is too good to be true, unfortunately. I lost over $450,000, another user said. I cannot pay the bank. While another user said, I will lose my home soon. I'll become homeless. And that is just really sad. It really is sad. I mean, don't get me wrong. People gambling all that money into these coins is pretty insane, to be honest. Like, but who persuaded them? We don't know the circumstances. And in my opinion, like, I do feel sorry for them. I really do. Like, I mean, that's just devastating to these people. And it reminds you of some of these .com stocks. Like, that's what it reminds me of. All the books that I read on the .com bubble, it was like a similar thing. Like, people were losing their homes. And, you know, this ESG movement, this cryptocurrency movement, it seems very much like the .com bubble in its euphoria. And, you know, in reality, like, Bitcoin sounds fantastic. Like, I want to believe in Bitcoin, but it's just been took by Wall Street and been pumped and dumped, and it's being manipulated like crazy. There's insane amounts of leverage in there. There's criminals in there too. Like, the market is just insane, to say the least. Like, you'll see these coins tank, because I have a lot of them in a watch list, and you'll see these coins tank on like a Sunday evening when the volume is the lowest that it could ever be, or like on a Sunday morning, sorry, when the volume is really low, or on a Saturday afternoon. You'll just see them suddenly tank like 20%. Like, it's unbelievable, the volatility in these coins. So anybody investing in them, in my opinion, this isn't financial advice, you just have to be prepared to lose all that money. Like, if you're prepared to lose all that money, then that's absolutely fine. Then whatever, you go do what you want. But it's really just a gamble. Like, there's no fundamentals associated with it to a certain degree. And all the fundamentals that people have said are to do with these coins like Bitcoin have just been proven not to be true. Bitcoin doesn't trade like digital gold. It's not digital gold. That's what it was meant to be, a store of value, digital gold. It's obviously not a store of value or digital gold. So like, it just trades with the NASDAQ. Like, it is tied at the hip to the NASDAQ. It's so correlated. I tried to get a chart and trading view where I could overlay them and expand them so you could see just how they move, because they are literally the same. You might as well just buy tech stocks. In the macro environment that we're in right now, I don't think tech stocks are a very good idea, although we are going into a bear market rally by the looks of it, because we crossed a major support. So what else? So basically the markets, let's go through the markets. So the Dow, the S&P closed up like 2.5%. The Dow, the NASDAQ, all the major indexes closed up, the Russell 2000. But on the week, like, even the NASDAQ struggled to make a weekly gain. Like, if we look on the week, it opened at 11,956. It's closed at 11,805. That's a loss of 150 points in a week. Now, we did hit a massive area of support this week, which was around these levels here. I think it was 11,700, if memory serves right. We broke that support. We went lower. So that suggests that we're going to go lower, but not necessarily right now. And it's bouncing off that support. Now, the funny thing is, we're up here at this other resistance level now. So it's going to be very interesting to see what happens, because last time, as you can see right here, we got up to this resistance right here on the NASDAQ, and we failed and just absolutely tanked from there. And that was literally when we had that interest rate hike, I think it was, the 50 basis points. We broke through that resistance, came straight back down, rejected it completely. This held below support for a couple of days. So that's incredibly bearish. However, we are at a major support. Like, if we look, I think on a yearly chart, or maybe on a 5-year chart, you can see it. But you can see this level that we're at right here. It is a previous resistance level where it's bounced off, this 11,700. So I think there could possibly be a bear market rally from here, but we'll see. It may fail at the first resistance, which is already at right now. So the other thing that I wanted to go through was I've actually added into my own portfolio. I just wanted to say this. I've added some UVXY. I added today quite a bit because it was down significantly. So I thought a great area of support to buy right now. This isn't financial advice, but if this gets down further, I'm going to be buying more and more of this. I'm averaging into this. And the reason is because this is just kind of a safeguard, because it's a hedge against the volatility that is going to be going on. And I just believe this is getting started. Like, if you look at what happened in March 16th, 2020, this was at 9. That can't be true. 911. I swear this can't be true. Some of these numbers on here, maybe they are. I don't know. but if it gets to 911, I'm going to be rich. And I don't think it's going to get there. I think this is some sort of mess up on the chart here, saying it's gone up to like 20, whatever. But anyway, you get the picture. So there are things out there that you can get, and I'm not saying go buy this. I'm not pumping this. I highly advise you don't go and buy this unless you truly understand what it is and what the use case is. But these things are out there to help you hedge against high volatility. Another thing that I wanted to go through, incredibly bearish for the economy, is gasoline futures are at an all-time high right now. Even though oil is at $106 a barrel or whatever it's on right now, gasoline futures literally closed up this week at all-time high, nearly $4 a gallon. Now, this is absolutely insane, guys, because when you look at the maximum chart, which goes all the way back to 2000, we're talking 22 years of data. We've never got to $3.94 a gallon. Like, this is absolutely insane. And if you think about all the extra taxes and everything that are built into fuel prices right now, this is unbelievable. Like, this is going to be coming to the pumps, and we've literally seen it's gone from $3.26 a gallon all the way up to $3.94 this month. This is absolutely massive and makes me incredibly bearish on the economy going forward, because, you know, people are not going to be able to afford gas. They're not going to be able to afford diesel. You know, jet fuel is going through the roof. The airlines are struggling with high debt loads, massive losses as it is. And now jet fuel is going to go parabolic as well. But gasoline futures going this high. And I saw some articles. Cody puts who's driving this season. And, you know, it's interesting you say that, Cody, because I saw some article, Yahoo Finance, I think I saw it on, saying that most Canadians are going to stay in the country. They're going to pay high gas prices and stay in the country. And that just shocked me. I was like, seriously? Like, it is so much cheaper to go abroad than it is to stay here in Canada. Like, places in the Okanagan are charging like $500 a night, which is just absolutely ridiculous. And you can literally go to places in Mexico and get places for $150 a night. Yeah, you have to pay for a flight, but the gas alone to get to the Okanagan from Calgary, you're going to be talking like $300, $400, $500, $600, $1,000 if you've got one of these gas guzzling pickup trucks, which most people have out here. So, you know, it's kind of funny because everybody also says like, oh, because where I'm at in Alberta is one of the cheaper places for gas in Canada, but everybody drives gas guzzlers. So it doesn't make any difference. Like, it doesn't matter where you are. If you're in Vancouver, people drive more economical cars. I've been to Vancouver. And if you're in Calgary, people drive all these gas guzzlers. So it all works out the same when you really think about it. The only slight difference is Ontario, but they're usually 10 or 15 cents higher than us, not that much. It's only really BC that is more than that. So it's insane what is going on in the markets right now. And nobody is talking about this. Like, I didn't hear anything about this on the news, but go fill up with gas, because in the next couple of weeks, it's going to shoot up if it hasn't shot up already. The futures are at absolutely insane levels. We're about to break $4. And just to show you where we've gone, in December 2021, we were at $2. We have doubled the gas prices. Like, so the government is saying, oh yeah, inflation is transitory. 100% rise in gas futures in literally less than 6 months, or around about 6 months. That is just ridiculous. That's absolutely insane. So this is going to be coming, and it's going to wreck the household budget even more. It's going to drive inflation through the roof because diesel prices are going to be going parabolic as well. Everything is going to go up in cost. The inflation is not transitory. So, and really, guys, if you want to know what inflation is going to do, just look at energy prices, because that is really the driver. The core driver for these rising prices are energy prices. So if energy prices are going up, we know that inflation is not going to be transitory. So the fact that they are talking about peak inflation, or they were talking about peak inflation, at least in the US, they're out to lunch, as we're going to see with some of these articles right now. So this one is an absolute hilarious one. Interest rate trajectory will depend heavily on housing market, Bank of Canada Deputy Governor says. So this one was shared and spread all around Twitter. People were reading that headline. They were thinking, oh my God, look, they're not going to raise rates. Oh my God, look, the housing market, everything like that. Nobody obviously read the article. I was the only one dumb enough to read the article. I'm just kidding. But the thing is, like, these are designed so good to get your attention, to do exactly what it did. I mean, it did the job perfectly. The idea of these articles is to grab people's attention, get them to share it round, and that's exactly what happened. It worked like a charm. So even though I hate the Globe and Mail, fair play to the Globe and Mail on this one, because they got the end result, which was a lot of interest. So this article has been everywhere, but I don't think people read it. So I'm going to read it to you. The Bank of Canada needs to keep raising interest rates to tackle runaway inflation, Deputy Governor Tony Gravel said on Thursday, although how high rates will depend on how the housing market responds to rising borrowing costs. So what I've done here is, in cyan, I've highlighted what they actually said, and everything in yellow is just the article, the media fluff. So Mr. Gravel said the central bank's policy rate, which has been at 1% since April, is still too stimulative. So that's the first thing. He said it's too stimulative. The policy rate we're at right now, 1%. Yet people are taking this as like, oh, they're going to stop raising rates. I mean, the housing market's already changed drastically. And listen to what he says in this article. Bank officials have said they intend to get the benchmark rate into a neutral range, which neither stimulates the economy nor holds it back, or between 2 and 3% relatively quickly. Whether the central bank pushes its policy rate above the neutral range will depend in large part on the real estate sector. So, okay, so first of all, let's just think about that. He just said after the neutral rate, and the neutral rate, they're saying the lower end is 2%, okay? If they even make it to 2% without the collapse in the economy, I'll be surprised. But they might actually pull it off, because, there's a couple of meetings before the fall. If they do another 50 basis points June 1st, which is pretty much an 80% probability right now, and then they do another 50 basis point, it really depends on the bond market. And that's what I'm going to be watching, guys, because they generally follow what the bond market is talking about, not what their estimates and models do and everything like that. So if the bond market is going down and yields are going up, then I'm going to be thinking, yeah, they're probably going to raise. But if the bond market is going up and yields are going down, then I'm going to be thinking, maybe they're not. And the bond market has been pretty much flat. It's been pretty much flatline for the past 2-3 weeks right now. And that's interesting. So, but anyway, what he basically said there was they're going to get it into a neutral range. And then it would depend on the housing market. So that is just absolutely insane. 2% will kill the economy. And let me explain why. It'll be like a knockout punch, because essentially they haven't had rates in Canada of above 1.75% since 2008. You've got incredible high amounts of household debt, which they even acknowledge in this article right now. You've got way more debt than you had before the pandemic and everything that happened there. So when the rates get above what they did before the pandemic, that puts extreme risk on people defaulting now, because the borrowing costs for all the debt that's outstanding, because it's so much of a larger amount of debt that you now have, the borrowing costs are so much more, people can't handle it and they just default. And and not only is it people, it's going to be companies, and that is already beginning. It's beginning right now. It's already starting. Companies are going to be the first thing to default, and that's already happening. And inflation is heavily impacting many businesses across the country. So it's a double-edged sword. Do you want more inflation? Do you want more interest rates? Either way, we're going to kill you with this sword. But which one do you want? Pick your poison. Like, there is no good way out of this. Even if they get it to 1.5%, I'm pretty much sure that it's done. Like, the bubble will be popped then, even though people won't realize it at that moment, because we are so close to that 1.75%. that the amount of debt that's now in the system is just absolutely insane. So as long as yields stay high after that, like, it will just cause a tsunami of defaults to happen. So anyway, whether the central bank pushes its policy rate above the neutral range will depend in large part on the real estate sector, Mr. Gravel said. So they went and ran with that article, with that headline. But guess what, guys? That was just clickbait. That was clickbait. Yeah, it was posted around everywhere, especially by people in real estate agents. They were lapping this up. They thought, this is just what I want to hear. This is just what my clients want to hear. So here we go. I'm going to post it around everywhere I can. But the reality is that was just clickbait. What he actually said was, it will depend on real estate once we get to 2%, which is above the neutral range. And they're saying it's between 2 and 3%. So if inflation is still raging, they might start saying it's 3%, the neutral range. You cannot trust these central planners, central bankers, and economists. They are absolutely out to lunch. I hate to say it, guys. But these people, they don't have a clue. If they did, it's like I said, they would have millions of dollars, because they would be able to trade like a pro if they really understood the macro environment that we're in. Yet they have no clue. They have absolutely no clue. So they want to go work for the government, and they can't even work for the bank. They're like the bank rejects, or they're the people who want to go work for the banks, like Hilliard said. So incredibly interesting. Rising interest rates are designed to slow the economy by making borrowing more expensive. That tends to slow sectors like housing. Well, we've already seen that happen. So it's, Mr. Gravel said, according to the English version of the speech, getting a little bit of a dry throat. But this slowing might be amplified this time around, because highly indebted households will face high debt servicing costs and will likely reduce household spending more than they would have otherwise. Yeah, that's exactly true. That's going to happen. He noted that the Canadian household debt to income ratio hit a record 180% by the end of 2021. Yet he didn't acknowledge why that was, did he? No. He didn't acknowledge why that was. He just said, oh, it's at a record level. I'm not sure how it got there. They were literally the people who caused it to get that high. And here he is literally saying, oh yeah, it's up there. I don't know how it got up there. How did it get up there? It's just absolutely insane. I cannot. Oh man. There are some signs that Canada's hottest housing markets have already begun to cool in response to rising interest rates. Home sales in Toronto dropped 27% in April, and an index that measures home prices in the city showed the first monthly decline since October 2020. Interesting. On the flip side, Mr. Gravel said that the housing market may prove to be more resilient than the bank expects, which could encourage it to move to interest rates above 3%. So they're in the same conversation that the Globe and Mail writ this clickbaity title about. He literally said possibly the most bearish statement you could ever give on Canadian real estate and asset prices, which is rates above 3%. I mean, we would never get to that. Well, I mean, the thing is, one thing that I should mention, which I kind of even didn't just think about until I got to this point, is in the past, they've gone 25 basis points at a time in these little hikes. Well, they're now doing 100% more than that. They're doing 50 basis points. So the rates are rising a lot faster. And I suppose that really, maybe they could get to 3%, you know, maybe they'll be at 2.5 because the economy is not going to react instantly. Like, yeah, you will see the real estate market slowing down, but you're not necessarily going to see massive crashes in prices. I mean, if we go back to that chart, you can see again, so you can even see, even in these markets where prices did absolutely tank, you can see here that February 2000, like from literally 2005 all the way to 2007, you literally, yeah, prices did go down, but they didn't go down a lot. Like it was 220 grand. You're talking like 10%, went from 220 to 200 grand, let's say, to make the math easier. Like that. That's 10%. That's not a lot over that period of time. Now, don't get me wrong. This is adjusted for inflation prices. So yeah, 10% it went down in real terms. And in reality, that was probably flat in nominal terms because of inflation being so high throughout heading into 2008. So you really have to remember that because it is price anchoring that does that. It takes a long time for people's psychology to adapt, and it will take a lot. I mean, the thing is, though, as well, the flip side to that is the fact that there's so much speculation, because speculation can cause an immediate big decline and a crash. So there's two sides to that coin, I guess, and we'll have to see how it plays out. I really don't know which way it will go in that regard. He also says specifically we could also get stronger demographic demand from immigration or some of the increase in housing demand we saw during the pandemic for bigger housing and in suburban locations could persist with much more than we have factored into our projection. So, I mean, this guy obviously knows nothing because the fact that he's mentioning immigration, like, just goes to show how educated these people really are. You don't really have to do much research to find out that it's not immigration causing the housing bubble. But anyway, Mr. Gravel's speech offered the clearest explanation to date about what senior bank officials will be watching as that. Oh yeah, real clear. Like he literally just said, oh yeah, it might depend on housing once we get above 2%. But we might actually go higher than 3%. Like, how is that clear? Like, why is the Globe and Mail, the question I'm asking, why is the Globe and Mail like reinforcing that these people have some kind of idea of what they're talking about? And this is why they cannot be trusted. These mainstream media organizations cannot be trusted because why are they doing that? Why are they trying to make out like these senior bank officials know what they're talking about when they obviously have no clue? And I'm pretty sure he says something else which proves he's out to lunch on this. Simon Harvey, head of, says the housing market is more likely. Yeah, that's fine. when I'm looking at housing price, oh, so this isn't even that guy. This is just some guy who I didn't realize that. It's just some guy who talks about, yeah, it's not even that guy. But he literally says about stagflation in the 1970s, that Mr. Gravel. And this just hilarious. Mr. Gravel noted several structural features that make today different from the 1970s. Employment contracts are less likely to be indexed to inflation today, reducing the chance a wage price spiral will develop. The central bank also has built up credibility. Oh my God, this is like jawboning. Like, this is just absolutely insane what they are. Oh my God. So literally he is saying there's many different things that mean that this is different from the 1970s. For one, for 30 years now, we've built up a credibility, like a credibility of literally inflating one of the largest asset bubbles in history. Like, what kind of credibility is that? What are they on? Are they smoking something? Because I'm pretty sure they are. But that is just insane. And the other thing is, employment contracts are less likely to be indexed to inflation. That would be a great thing. That would actually be good. I mean, it wouldn't be good for business because they can't. Well, actually, yeah, then they would be able to pass on the price increases because people will be getting paid more. But the reality is that they're literally saying that negative wages are a good thing. I mean, that is dead economics, in my opinion. Like, when is people's incomes going down good for the economy? What planet did these guys go to school on? This is just, I just cannot get my head around these sort of people. And again, it's not even just the Globe and Mail. We're just going to go to another ridiculous article that somebody sent me after I put the post on Twitter saying that I'm going to cover this lunacy in the Globe and Mail. Investors bet on Bank of Canada setting G7 pace in move to neutral rates. That's hilarious because they are literally the ones that can least do that. Like, in reality, they don't know it. Obviously, these things are going to take time to unravel. But just look at some of the stuff that is said in this. This is Reuters, by the way, but it's on Yahoo Finance. As Canada's economy overheats. Oh my God, you just could not make this up. The Bank of Canada is likely to be among the first major central banks to lift interest rates to a more normal setting, even as worries persists about record high levels of household debt. Yeah, but we'll just sideline that one. Let's just think about that overheating economy. That overheating economy where wages are negative. Sounds like a real good one, folks, where inflation is raging, wages are negative. That's literally stagflation. That's literally what we have right now. And we'll have the other component, which is high unemployment, soon enough, unfortunately, or fortunately, depending on how you look at it. Money markets expect Canada's central bank to continue to raise rates by 0.5 percentage point at its next two policy meetings in June and July. So that would take it to 2% very quickly. So markets would struggle to react within that time frame to the rate jumping that much, which is insane. So then essentially they'll be back at neutral. And depending on how long that stays there will depend on the amount of damage that it's done. But in my opinion, once you get above that 1.5, 1.75%, it's over. Like, it's done. They're taking the pin towards the bubble. They just don't realize it. So that would lift rates to the bottom of the 2 to 3% range that the central bank estimates to be in a neutral setting, or the level at which monetary policy is no longer stimulating the economy. Yeah, of course. The BOC has the strongest case for already being at neutral of any peer group central bank out there. How does it have the strong? And again, this is head of capital market economics at Scotiabank. Doesn't that scare you that these people our like head of economics at Scotiabank is saying that literally they're the ones that can raise rates the most, when they are literally the most exposed to those rises as well. Like they're literally going to see their profits dwindle down as people don't refinance. Or maybe they think, I think the reality is, it's like Hilliard said, they think that there's a soft landing. They think that there can be a soft landing, and there isn't going to be one. There has never been one. Please, if you know a soft landing, drop it in the comments below. So it's elaborate. Greg says, elaborate on neutral rate. What does that mean? They essentially mean it's no longer stimulative towards the economy. But how can a neutral rate be at 2%? And that is like negative real rates in the economy. In my opinion, any rate below the rate of inflation is stimulative, because you're going to have banks try and give out money and push it down people's throats at those rates. And it's absolutely, we never get there, obviously, but we don't live in that world, unfortunately, anymore. Among G7 central banks, the Federal Reserve and the Bank of England could also lift rates to neutral in the coming months. The Fed's estimate of neutral is in line with Canada's central bank, but the BOE's is much lower at 1.25% to 2.25%. Unlike the Fed, Canada's central bank does not have a dual mandate targeting employment as well as inflation, nor has it adopted average inflation targeting. I actually didn't know that until I read this article. So yeah, there you go. You learn something new every day, that they don't have a dual mandate, apparently. But obviously we know they do on the backstage. That obviously if unemployment starts spiking, then they are going to probably try, and I don't want to use the key word there, try and do something about it, because they may try and fail. And government spending continues to add economic stimulus in Canada, while population growth is raising demand, despite the fact that population growth is lower than it was during the 80s, the 70s, the 90s, when housing prices were up and down, around. Yet they're saying that that's causing the pressures. Now, again, it's just a rationalization, but I'm just taking that because this is TD economics and they're making rationalizations. Like, I mean, I'm not the smartest guy in the room, but I am a damn sight smarter than these idiots who work at the banks and in the central banks. Because to be honest, a 10-year-old could be smarter than the Bank of Canada. And that's giving it some credit there, because honestly, the Fed, the Bank of Canada, they just get rid of these people. They are sucking up a vacuum of money from the government that just does not need to be there, or they're printing it themselves. Canada's economy is likely to be particularly sensitive to higher rates after Canadians borrowed heavily during the pandemic to participate in a red hot housing market. That sounds FOMO written all over it, doesn't it? When they put it like that, it sounds like FOMO, doesn't it? But back in the time, everyone was rationalizing how, oh my God, housing prices, they're never going to go down. Like, this is the end zone now. If you don't buy, you're never going to buy. And here we are, like, markets are dropping substantially in Ontario, and sales are dropping everywhere. Prices are coming down in Alberta. Like, it's insane. So we did that. All the major central banks are dealing with private debt and housing affordability issues. But if anybody can pull off neutral and beyond, then it's got to be the BOC, Scotiabank Holt said. Fair play to him. He is just literally, I mean, God, like, let's read this again in a year or two and see. I'm going to save this actually after the stream, because some of these news articles, and I have been saving them just for future reference when other bubbles happen, because they will, 10, 20, 30 years, whatever it takes, there'll be more bubbles. I can guarantee it. But it is absolutely insane. So yeah, it's just kind of mad. One thing I just wanted to quickly check whilst I got you on here was what New Zealand did, because I'm pretty sure New Zealand had interest rates this week. So maybe I'm wrong, but no, they didn't. It's coming on the 25th of May. So no, wait. Yeah, the 25th of May is when it's coming for New Zealand. There was one bank, though, I'm pretty sure. 5th, 12th. Yes. Okay. So let's fast forward over this. So Mexico has raised its rate again. So this rate came in on you're watching me do this as I'm trying to figure it out. Interest rate decision. So they hiked it 50 basis points again. They're now at 7%. So this is going to affect the housing market in Mexico, which a lot of people participated in when rates went down in Mexico. Because if you look at this, the same thing happened that happened in Canada and the United States. And, you know, people down there have gone down there. And I'm talking about this because this is a place where I'm interested in investing in personally. That isn't financial advice. So this is a market I am really looking at. And Mexico, you know, they did the same thing. Guess what? Same result. The places that didn't do the government deficit spending, the lowering of interest rates, guess what? No housing boom. Isn't that strange, guys? So you really just have to take those components away, and there is literally no housing boom. Some of the housing markets in countries which didn't do it, they actually went down. Like they actually didn't recover. They actually took a significant hit. Now, you also had a trickle down of capital going to places which are popular with people from the United States and Canada into Mexico. The same thing would have happened into Spain, Greece, Portugal, all these different places. Markets have just been inflated and inflated and inflated, and people have rationalized it. They've said, you know what? It's never going to go down. Like, I'm sure there's a lot of people who retired in Mexico saying, yeah, there's tons of people retiring and moving here, remote workers, Airbnb. Like that, I mean, it is insane. There's so many rationalizations that you can make about a housing market. And I guess that's what makes it so frothy, is because literally you can use any excuse and people will run with it. People will believe it. So it's crazy. Yeah. So David says we're looking at another 50 basis points up in New Zealand. So that's on the 25th. So we'll keep an eye out on for that, and we'll cover that when that happens. I don't think there's any other central banks that are hiking, but interesting. Mexico, they're at 7%. Can you imagine Canada or the United States at 7%? What would that do? But they've gone there in such a relatively short period of time. I mean, literally, they started hiking mid to fall last year, and they've took it from 4% all the way to 7%. Like, that's a substantial increase, and they're probably going to keep going. Where's neutral for Mexico? Is it going to be 8%? Is it going to be 10%? But, you know, when you look at inflation for Mexico, it's very similar to what we see here in Canada and the United States. So they might be at a positive interest rate before we are, because I don't think we're going to be ever getting to one again. And that's why, quite frankly, I hold gold and silver. But interestingly, we'll just touch on this whilst I think about gold and silver. I nearly forgot about gold. But gold is it is really sold off bad. And like literally, I think we're down now on the year, or just up slightly. But it did go down above that $1,800 support. But it didn't hold down there. It was down there, when was it? One day this week. Yeah, there it was. So it was on this day. It was down Friday. I don't remember it was on Friday, but anyway, it did briefly go under that and came straight back up. So that's a good sign. It keeps rejecting that level. That's a good area of support. In my opinion, it's a good time to be accumulating gold and silver because they're incredibly undervalued. And you don't even have to accumulate gold and silver if you want to be more speculative about it and you want to have something that you can make money on potentially, because there's always a chance that you lose money. That's why you've got to have risk management in place. But gold and silver miners, incredibly cheap. And I'm actually going to be looking to add a couple more if this sell-off continues, because it is just insane. Some of the mining stocks have just gone down significantly, especially some of the junior miners. That's what I really like. Alexo, like there's a couple that are just like that. They're down like 50% this year, which is an insane bargain in my opinion. So yeah, and again, like physical gold, I just hold it as insurance on money. I do not hold it to sell it at a higher price in the future. Will I eventually sell it? Hopefully not, because if I have to sell it, that means the whole world, well, not necessarily the whole world. That means the Bank of Canada has destroyed the money system in Canada if I'm in Canada at that point. So, yeah, hopefully we don't get to that point. Hopefully they have a little bit of brain power up there, but who knows? Anyway, it is absolutely insane. So US being first, thank you so much for that super chat. Let's just see who's in the chat here. So we've got Trader586, Arthur, David, Cody, all you guys. Thank you so much for tuning in. Please don't forget to hit that like button. That really helps get these streams up so that they're all on the YouTube algorithm, pleasing the YouTube gods, let's call it. And more people will see it and hopefully get some value out of this, if there is any value in it. Anyway, guys, as usual, this isn't financial advice. Have a stiff drink if alcohol's your type of thing, because I think we're going to need it. And I'll see you probably on Monday for another live stream. Probably going to have a video coming out on Sunday, so watch out for that one, guys. And I'll see you in the next one. Have a fantastic weekend, guys. Enjoy it. It's winter here in Calgary, but here we go. So anyway, guys,